Imagine earning 12% yields from real companies, without banks, without brokerages, and without massive minimums. Tokenization is rewriting who gets access. BlackRock's CEO, Larry Fink, just explained exactly where this is all heading.
I do believe we're just at the beginning of the tokenization of all assets. Step 2 is going to be the tokenization of every financial asset. And to me, this is where we believe it's going. And we have the largest cash money market fund that's tokenized called BUIDL.
Entire chunks of Wall Street are being rebuilt on blockchain rails right now. Tokenized money market funds have become one of the biggest successes in the real-world asset ecosystem. And what's coming next, and growing even faster, is private credit. Tokenized private credit has exploded past $13 billion outstanding, making it the fastest growing category in the entire tokenization industry. But before we explain why this shift is happening and how retail investors can now access the exact same credit yields that giants like Apollo earn, let's break down what tokenized credit actually is. Credit is simple. Someone lends, someone borrows. Tokenization is when those same claims, the loan principal and the rights to interest, are represented as tokens on a blockchain. Each token represents a direct claim on the underlying debt. Smart contracts handle all the heavy lifting, disbursements, repayments, yield distribution, automatically. What changes isn't what investors own, but how it's issued, settled, and traded. Tokenized money market funds hit several billion in assets almost instantly. BlackRock's BUIDL fund has already proven the model, giving institutions daily on-chain yield with instant settlement and 24/7 redemption.
So the tokenized fund with BlackRock is essentially a money market fund. It has short-term treasuries and repurchase agreements, and then you get a token at the beginning when you purchase a unit on the fund. The token is valued at $1, and then as you accrue interest, we basically will send you to your wallet, which is essentially your address on the blockchain that contains your assets. We will send you more tokens, so you increment the number of tokens that you have there. And then eventually you can redeem back into cash if you wanted to then exit the fund and get cash.
Money market funds became a huge success because the underlying product was already attractive. Tokenization just upgraded the plumbing. Instantaneous settlement, 24/7 liquidity, and the ability to use these shares as collateral in DeFi. Now that we've covered the safe, low-yield bucket most people know, we can move into private credit. Private credit has always been a closed club. High minimums, accredited investors only, and completely inaccessible to everyday people. This is where Goldfinch steps in. Goldfinch is a company that connects real-world borrowers with on-chain investors. They partner with the same private credit firms that manage billions, tokenize the loan exposure, and then let anyone buy a small piece on-chain. Here's how they explain it themselves.
Joining me today is Mike Saul. He is co-founder at Goldfinch. All right, so tell me, how does Goldfinch improve upon traditional finance's approach to lending?
Yeah, so there's a few different ways. The big way is about increasing the accessibility. So by using blockchain, it makes it much easier to connect lenders with the borrowers across many different countries. So right now, Goldfinch has $100 million in loans, active with borrowers in over 20 countries. That'd be very difficult to do without blockchain because we're able to connect people across so many different places. A big way is by using blockchain to make the rails much easier. So it allows a lot of people to interact with the smart contracts in a way that would be very difficult previously. Also, with a lot of traditional credit funds, to be able to even invest in them, you have to be usually a qualified investor and have a really high bar of being able to do it. So only the very wealthiest of the wealthy are able to participate in these funds. But then now we're seeing increasingly more and more individuals and a broader market are able to participate in these kinds of deals. Goldfinch is using blockchain to open up the number of people who even get to participate.
Goldfinch Prime isn't originating or underwriting new loans itself. Instead, it buys slices of the same institutional loan portfolios that giants like Apollo and Ares are already invested in. Goldfinch then bundles those slices into a diversified pool and tokenizes it. Non-US investors can buy those tokens and earn exposure to the same institutional grade loans, typically yielding 9 to 12%, that used to require $5 million minimums and strict accreditation rules. This model makes private credit more accessible, more fractional, and more liquid. Shares can be traded 24/7, yields are programmable, and settlement happens instantly. And when you combine that with far higher yields than money market funds, it's clear why private credit may be the next major asset class to be fully tokenized. Every major bond, loan, and credit fund eventually becomes a token. The only real question is, who controls that new ledger? Traditional banks, new DeFi protocols, or some mix of both?